With Canada's federal election now over, with buyers across the country who appeared to be hitting pause on the real estate button, Toronto's sales plummeted 21%, Vancouver's inventory is up 38%, but here in Moncton, we're seeing something completely different. While the election uncertainty froze major markets, Greater Moncton hit a rare sweet spot, what realtors will call a balanced market. While prices are still climbing, even as buyers gain leverage, today's video is a market update, but I'm breaking down why our housing market is so resilient here in Greater Moncton. And we'll take a look at how the election could change everything for Canadian real estate and which Moncton neighborhoods are outperforming despite national slowdown. If you're wondering whether now is finally the right time to buy or sell in Moncton, you'll get your answer in the next 6 minutes or so. Hey everyone, welcome back to the channel. If you're new here, my name is Cameron Brio and I'm a realtor in Moncton, New Brunswick. I make videos every week to help you buy, sell, invest, and navigate the Canadian real estate market. And if at any point you want to dive deeper into the Moncton real estate market, the first link in the description allows you to book a meeting with me. It could either be on Zoom or we could grab a coffee. Let's start with a quick snapshot of Greater Moncton's market for April 2025. Total sales volume was $114,100,000. We had 308 total transactions. Our median home price is $348,000. Our median day on market is 30.5, and we currently have about 3.9 months of inventory. But to understand why our market is performing so well, we need to look at the national picture first. Let's compare Greater Moncton with Canada's major markets in Q1 2025. I pulled data from CREA as well as published information from various real estate boards across Canada that was available online. In Toronto, it's been a challenging quarter. Sales were down 21.3% compared to last year, with only 12,895 homes sold. The average price dipped slightly to around $1 million, and that's nearly triple Moncton's average. And here's the kicker. Toronto now has about 7 months of inventory, which firmly puts it into a buyer's market. Vancouver, well, it tells a similar story. Sales are down about 7%, prices are essentially flat at $1.2 million, and inventory levels are at their highest in nearly a decade. Only about 15% of new listings are actually selling. I remember when my phone was ringing nonstop during the pandemic boom, the entire Canadian market was frenzied. Now we're seeing a much more reasonable pace. I actually had time to walk through 7 properties with a client last weekend without rushing. Calgary has been Canada's hottest major market recently, but they've cooled off just a bit. Sales there dropped 19% compared to last year's record-setting Q1. However, their inventory is still relatively tight at 2.4 months, and their prices have held steady at about $592,000. Halifax, our Atlantic Canada neighbor, is the bright spot among major markets. Their sales actually increased by 3%, and prices rose by 5.7% to an average of $598,368. That's still more than $200,000 higher than Greater Moncton's average. The market shifts we're seeing are being driven by 3 main factors. Interest rates. The Bank of Canada cut rates to 2.75% in March, which is down from last year. I'm sure you heard about it on Instagram from all the other realtors. But know that this has improved affordability slightly when looking at this year versus last year. But the buyer sentiment still remains cautious. Migration, the pandemic-era relocation boom that Atlantic Canada benefited from has slowed. Halifax and Moncton both saw net migration gains turn to small losses, but our overall population continues to grow thanks to international immigration. The federal election policy uncertainty is making buyers and sellers more cautious nationally, with many taking a wait-and-see approach to their major purchase. And I don't blame them. I'm seeing a lot of it in my market. People want to wait and see. Despite these broader trends, Moncton has managed to achieve something remarkable. Perfect balance. Let's take a closer look at what's happening right here in Greater Moncton. Our sales activity has remained stable while other markets saw significant declines. Last month, we saw 308 transactions, which was up slightly from the previous month. This steady performance shows consistent local demand supported by our affordable advantage. Our median home price of $348,000 is virtually unchanged from last year, which does show market stability. But there's an important nuance here. While prices aren't skyrocketing, skyrocketing like they did in 2021 and 2022, they're still at a record high. The MLS Home Price Index for New Brunswick was actually up 8.6% year over year in March. A client of mine listed their home in January expecting a bidding war like 2022, and after about 20 days on market with no offers, we adjusted the price slightly, less than 1%, and we sold it within a week. That's our new reality. Price it right from the start. I use this as an example because there is always a range for pricing, and even a small price adjustment proved that the market could respond. The most significant shift in Moncton is the growing inventory. After years of tight supply, active listings have increased substantially. We now have 3.9 months of inventory, down slightly from last month, but up from the previous year. This is giving buyers more choice than they've ever had, at least in the last few years. And our median day on market is 30.5, which is down from the previous month. Well-priced, affordable homes, especially those that are under $350K, can and still sell quickly. But higher price listings over $750,000 have seen longer days on market. The sales to list price ratio tells an interesting story. About 75% of homes sold below asking in Q1, with an average seller receiving about 97% of their list price. This is a stark contrast to the bidding wars of previous years and confirms that buyers have gained significant negotiating power. All right, I'm going to do something that I typically do over on Instagram, but I thought it would be cool to show some market data for last month and how different neighborhoods are performing. Riverview, it had 13 sales this last month, and it continues to command the highest median selling price at $460,000, with an average price of $429,488. It's also the area with the most new single-family construction. Moncton Center, or that area close to downtown, including downtown, but we're not going to call it downtown. It had 18 sales, and it offers the most affordability at the entry price point, with a median selling price of $332,950, and the average was about $369K. Moncton Center has the oldest average building age. The median year is 1980, and the lowest price per square foot at $183 per square foot. Properties here are typically on the market for about 29 days, and in my experience, at this price point, there are some repairs and renovations that would need to be done. This is Moncton North, and it remains a popular area with 35 sales this past month. It has a median selling price of $392,000 with an average price of $431,595. This area has the highest average price per foot at $245 per square foot and a median day on market of 29. This area also has quite a few premium properties with more than 3 bedrooms and lots of upgrades and high-end finishes. Dieppe continues to surprise me with 35 sales and had a median selling price of $344,900 and an average of $372,000. Dieppe has the highest concentration of new construction if you're looking for semi-detached or semi-towns. They are typically listed at $350,000. The inventory in Dieppe seems to be moving the fastest in our market with a median day on market of 24 days, and properties here are selling at 100% of their list price on average. Again, there's lots of new construction here. Looking at the sale to list price ratios across all the areas, most properties are selling at approximately 99% of their list price, with Dieppe slightly outperforming at 100%. This indicates a balanced market with neither buyers nor sellers having an overwhelming advantage. We're seeing a clear price segmentation between neighborhoods, so let me break that down. Entry-level markets range from about $190,000 to $325,000. At that lower end of the 190, those could be mini homes or mobile homes on leased or owned land, and then going up to semi-detached or older detached homes, depending on the neighborhood. The mid-market sits around $325,000 to $450,000, and the premium market ranges from about $450K to $675,000 plus. New construction continues to command a premium, particularly in Riverview and Dieppe, with properties built in 2024 and 25 fetching higher prices. I've been selling homes in Moncton for a few years, and this is the first time I've seen such a perfect balance between between buyer opportunity and seller stability. It reminds me of the pre-pandemic market in 2018 and 2019 when I started investing. So what does this mean for the rest of 2025? For buyers, this could be the best market in years. You have more inventory to choose from, more time to make decisions, and actual negotiating power. If you've been waiting on the sidelines, this balanced market provides an excellent opportunity, especially with interest rates trending downwards. For sellers, you probably know what I'm going to say. Follow the market data and price reasonably from the start. The days of listing high and still getting multiple offers, I think, are behind us. However, well-priced homes in desirable areas are still selling, and we're not seeing the price drops that some had feared and we're even hearing about in other major markets. In fact, our prices are still rising modestly while Toronto and Vancouver still struggle to maintain from the peak. Looking ahead, I expect Greater Moncton to maintain this balance throughout most of 2025. Further bank of rate cuts could bring more buyers to the market in the second half of the year, potentially creating more competition. The federal election outcome may also impact housing policy, so that's something to watch closely. Looking at some of the neighborhoods around Greater Moncton, Riverview will likely remain the premium market, appealing to those seeking newer homes with more space. Moncton Centre will continue to offer the most affordable entry point. Moncton North will maintain its popularity with a diverse range of housing options. Dieppe will likely see the fastest sales with the strongest sale-to-list price ratio price performance. Greater Moncton's affordability advantage positions us well regardless of what happens nationally. Our market is driven more by local fundamentals than speculative activity, making it less volatile than other major centers. If you're thinking about making a move in the Greater Moncton area this year, now might be the perfect time. You've got the rare combination of stable prices, reasonable inventory, and improving interest rates, or so we've seen so far. I know this update is a little different and more in-depth than normal. We took a comprehensive look at Greater Moncton's real estate market for the month of April, as well as going back on Q1. From where I'm sitting, we're in a balanced, healthy position while many major Canadian markets struggle with declining sales and excess inventory. This is a unique moment for our local market. Prices are stable, inventory is reasonable, and both buyers and sellers can find success with the right approach. If you are considering buying or selling in the Greater Moncton area, I'd love to help you navigate this balanced market. You can click the first link down in that description and you can book a call and we could speak about your specific needs. If you found this market update helpful, please give this video a like and subscribe to the channel for more weekly content about the Canadian real estate market. Thanks for watching, and I will see you in the next video.